Good afternoon, everyone. This is T3 Live Editor-in-Chief John Darsie here to bring you the daily recap. And we continue to get somewhat quiet action in the S&P, but the headline you're going to see all over the media this afternoon is the NASDAQ closed above 4,000 for the first time since 2000. And we all think back to 2000 and what was going on in our lives at that point. Obviously a very long time ago in a very different market environment, but those headlines obviously you'll see everywhere, and it's very interesting to think about how far the NASDAQ has come from its lows following that infamous tech boom. But impressive action in tech today, and in general what we've talked about as the key component in this market in 2013 has been sector rotation. And we've seen various sectors lead over the course of the year. Towards the beginning of the year you had home builders and the banks doing well, and then over the last few months you had tech leading the rally as taper talk started. You had defensive sectors start to break down, stuff like that. And then today we saw a little bit of a change from what we've seen on a more micro basis recently. We've seen recently the banks perk back up, some of those defensive sectors perk back up as expectations for tapering sort of dissipate a little bit. But today you actually saw tech take the lead, and you saw, like we said, the NASDAQ make new highs while some of the other indices were a little bit lethargic. But we can take a look at the chart. I'll take a look at the chart of the Qs first, because on our videos we don't give the NASDAQ quite as much love as the S&P, so we'll start with the NASDAQ. The Qs, like I said, new high above 4,000 on the NASDAQ. Impressive action there, obviously at highs, so no resistance in the way. You look at the spiders, a little bit lethargic action like we talked about. Sort of a holiday shortened week. We have Thanksgiving obviously coming up in a couple days, Hanukkah starting on Wednesday, so makes sense that volume is drying up. And in general, definitely not an environment to really be aggressive after the big move so far this year, and the fact that we have holidays coming up and volume could be light. But like I talked about, today was the story of the day was tech. Tech perking up, some stocks in tech that had been weak rebounding a little bit, and stocks that had been strong extending higher to make new highs. And the top of the list, we'll start with Apple. Apple was put last night on off the charts as a new long idea. We hadn't listed it for some time on off the charts, and we try to be symbol agnostic on off the charts, where we don't try to gravitate to the big names. We like to just play the setups as they come and ignore the profile of the stock. But Apple this time actually had set up a good setup. Go take a look at the chart. Apple, we talked about this triangle pattern that had formed in the upper levels, or a sort of a mid-level triangle pattern, I guess you could say, based on the context of the move over the last year or so. But a nice triangle pattern. We highlighted yesterday's high as the trigger point. And very early we got a surge up through yesterday's high, and we got some really nice momentum in Apple. Some people maybe weren't expecting this type of momentum, but when you get a pattern, sometimes that's what it leads to. So really impressive action there for a first day move from off the charts last night. So good timing there. Obviously the next pivot to watch will be the 540 area. So if we can get above that, we can trigger some additional momentum and get back perhaps towards the mid 500, 600 area as we head into the holiday season. Amazon. Impressive move. I saw a stat that since its IPO, Amazon is up something like 21,000%. So if you were visionary enough to like Amazon at its IPO, you've obviously been rewarded on all time frames, as Scott says. But impressive action here. Found support on its 8-day moving average about 5 days ago, and since then has been stair-stepping higher, extended higher today. Impressive action. Google as well. Google, is now, people see it as somewhat of a blimp. It's a $1,000 stock. It's too overpriced. No one's going to buy it. Too capital intensive. Apparently that's not really holding true. Google continues higher. Had that big gap after earnings, surged from that gap, formed another upper level base, and then extended higher the last 2 days. Impressive action there. Definitely looks like a stock that is not slowing down anytime soon. We'll also take a look at Facebook. A couple of stocks, like I said, in tech. Tech has been very much a mixed bag, where you've had several stocks like the Googles, the Amazons leading. Apple at times has been strong, but then again you've had other stocks in the group actually show some weakness recently, and it's a little bit of a red flag when you see that much divergence in the tech group. But anyways, Facebook is one of those that's been weaker recently. We actually highlighted it as a short on off the charts and got a really nice move down through the trigger price yesterday. But today, after trading through the low, you could say it was a little bit of a red dog reversal as Facebook traded through yesterday's low and then back above to post some decent gains today. The next areas to watch, obviously it's retesting this prior breakdown level, and then the 8-day moving average will also be a key level for Facebook to contend with to see whether this was just sort of a transitory bounce or whether this is the start of a little bit of a comeback. See if dip buyers are really committed at these levels. So the same thing in Yelp. Yelp is one that triggered through pivots, downside momentum yesterday, but then today it didn't trade through yesterday's low like Facebook did to trigger a red dog reversal, but really nice bounce, impressive gains to sort of match most of yesterday's losses in Yelp. Another one to see, is it just a retest of the prior breakdown level and the 8-day moving average? Is it going to head lower on a swing basis, or is this the start of a bigger bounce? That'll remain to be seen in the next few days or next week as volume firms back up after the holidays. And then Baidu saw a nice day. This is one that a few weeks ago was Mark's trade idea of the week. Recently it's been weak over the last week or so. I'm saying the word weak a lot, but I guess that's just the nature of trading commentary, I guess. Anyways, Baidu today, big wide range bar, continued lower early, triggered a red dog reversal back above yesterday's low, and really impressive engulfing bar there that tells you that this one could have its eyes on highs here. The pivot high here from this candle, 169.55. The bigger pivot high, 169.75. So right around there, just shy of 170 would be potential area to contend with for Baidu if it can continue higher. And then the 3D printers, they also fit into tech, but they're sort of their own little subset, their own island right now that definitely more conducive to short-term type trading right now. If you're a long-term investor, I would caution against these names right now, given their speculative nature and wild volatility. It's not something you really like to contend with when you're putting money to work long-term. But if you're a short-term trader, you're loving the volatility these things are offering. And yesterday, and in his morning game plan this morning, Steve LeVay in the Trade the Morning mentoring room on T3 Live was talking about VJet. VJet's one that got hit really hard after Citron came out with a negative report, bearish report on the stock. Wasn't able to bounce as quickly as some of the other 3D printers, but really nice extension today with the gap and go to the upside, back above its 8 and 21-day moving averages. After today, a little bit hard to buy. This is not a high-quality stock in my opinion, but one that on extreme highs, extreme lows, can give you some two-way opportunity. And then the leaders in the group, Triple D and SSYS, I'll just run through those quickly because they have similar setups. Both are forming sort of wedge patterns. They had those big breakdowns, had a little bit of a snapback toward the middle of that range from that sell-off, and now they're sort of coiling. You could say the longer-term trend is to the upside, so this could be a wedge pattern that leads to another break higher. But what we like about wedge patterns is that you can calculate entry points both to the long and short side, depending on what side of the wedge it breaks out of. So we'll just be watching that pattern in these names, SSYS, and I'll look at DDD again. Even more defined somewhat in DDD. And then the biotechs are also a group I think you should keep an eye on. The biotechs, the IBB is the ETF, just remains strong. The biotechs are something that can sort of diverge a little bit from the broader market because of the nature of biotechnology and all that type of stuff and pharmaceutical research. And I'll just run through really quickly the top 7 components in the IBB ETF. Number 1 component is BIIB. Obviously, BIIB played a big part in that breakout for the IBB ETF because it had that big, I believe, 15% or so gains after one of its drugs got protection in Europe. Today it had a little bit of a pullback, but nothing more than a healthy pullback. We'll see what levels are tested, see if BIIB can form another upper-level base. But until then, I think you shy away from it until another consolidation forms. Second biggest is GILD, Gilead. Similar type of situation, nice breakout. Sort of a sympathy trade with BIIB, but pulling back a little bit now. Celgene, third biggest component in that ETF, same story. Fourth, Amgen, a little bit more wishy-washy, as Scott would say, a little bit in the middle of its upper range. You can zoom out a little bit, see if there's a better look that we can get. Overall healthy action, but nothing compelling on a short-term basis in Amgen. Regeneron, REGN. Same type situation, but you see a little bit of a descending channel forming in Regeneron, one that hasn't been quite as strong. This is on the weekly chart. Hasn't been quite as strong as some of the other names like a BIIB or a Celgene. One that looks like a little bit of a compelling upper level pattern here. So I want to keep an eye on is Regeneron, MYL. One that keeps extending, one that's a little bit hard to buy on a short-term basis, but nice extension to the upside today after yesterday's breakout. And then you have Alexion, ALXN, another one that's not quite as compelling, not quite as strong, but you could talk about a descending trend line in the upper levels here to potentially measure a trade if you want to be involved with biotech. And I'll run through the banks really quickly. Like I talked about, sector rotation has been the name of the game in this rally. And the banks, after a really strong run over the last couple weeks, starting to cool off a little bit. Bank of America remains easily the strongest one in the group. And as you can see today, not much of a pullback in Bank of America. Not a pullback at all, in fact. Yesterday it closed off its highs a little bit, but today it opened higher. Tried to challenge yesterday's high, but couldn't really get there with the low volume type of tape that we're in, but still finished with gains. And then you have something like Citigroup that we've been watching very closely. Yesterday closed off its highs a little bit, and that led to a little bit of a pullback. Nothing major, but a little two tails in a row, not exactly what you'd like to see. But I don't think it'll lead to anything major to the downside. I think these banks look poised to go higher, and I think with a little bit of rest and consolidation next week, they could perhaps perk back up a little bit. STI is another one we talked about on Off the Charts. A little bit of a tail yesterday and a little bit downside today, but nothing major. Still looks like it could head higher. And that'll do it for today's recap. One thing I want to talk to you about is on Cyber Monday, as you know, we have Black Friday. Everybody goes crazy, runs around the stores, and then Cyber Monday was born for internet sales and things like that. So at T3 Live, we're going to participate in that, but we're going to keep that sale a mystery until Monday. You can sign up on our mailing list. There's a big black box on the T3 Live homepage that you can opt into our mailing list. And what that'll do is we're not going to spam you. We're not going to send you 5 emails a day or 5 emails a week or even a month probably. We'll let you know about things like this Cyber Monday sale where we're going to offer a deal that we haven't offered. If we've ever offered it, it's been a long time since we offered these types of savings on some of our products. So if you're interested in being more involved with the T3 Live community besides just following us on Twitter and following the free blog and videos and things like that, definitely sign up for that mailing list. Check out our Cyber Monday sale, a really attractive offer in my opinion. And I'll just leave that there. But from T3 Live, everybody at T3 Live, I know Scott will be with you tomorrow morning for the morning call and for the recap, but this is my last day heading home to North Carolina for the holidays or for Thanksgiving. I want to wish you and your family a happy, healthy Thanksgiving. Always one of my favorite holidays. You get to see family, get to see friends from your hometown that you don't get to see very often. But again, happy Thanksgiving, and this has been John Darsie here for your daily recap. Have a good one.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.